Good morning, everybody, and welcome to this week's weekly wrap. It's the 5th of June, winter already, my God, and we've got two people on the screen. We've got Mirko Kagura, but more importantly, we have a lovely lady by the name of Lisa Halley who's joined us for the first time. Welcome, Lisa. How are you?
Oh, well, very good. This is a Friday. The sun has come out, and I'm going to head to the Grampians this weekend. So, things are looking positive with some cold, fresh air for the weekend.
Magnificent. Are you hiking in the Grampians? What are you doing?
Well, my husband isn't such a hiker as a bit of a vague walker, and he does like a chicken parmigiana in a fire, at a fireplace later in the day. So that
Nice,
that will
nice. No
be,
complaints there.
yeah.
Well, you know what? It is lovely to have you join us. So, welcome for the first time. And Mirko, welcome back, buddy. How are you, man?
I'm going really well, really well. 1st of June was Monday, and it was almost like someone flicked a switch and said, "Guess what? It's winter, and it's game on." I don't mind the cold weather; it's good.
Yeah, look, I'm with you. I do love the cold weather, but I prefer it when it's snowing, and I prefer when I'm somewhere else and not in the office.
You reckon some skis strapped to your ankles, huh?
Yeah, look, I do love a bit of a ski, but it's been a while since I've been there, Mecca. So I'm not sure I can still maintain that. So, but mate, it's been a big week on markets. Everything
Yeah, I
so far?
just had a quick look at what's going on in the markets and what is happening in Australia, and we're actually off zero point 0.7 today, which I am a little bit surprised about because the US market was positive overnight. So all odds is off 1.2 for the week so far. We've still got 4 hours to trade, so we'll see where we end up. But it looks like we might end up in the red on that front. And S&P 500, like I said last night, was up almost 0.44-ish%. So they're in the green. The Nasdaq was off this week, off 0.5%. And I think the headline was, there's been a rotation out of AI, technology stocks, and it's all doom and gloom. But having said that, when you look at the numbers that these stocks have actually punched out over the last sort of couple of years, it seems like a bit of a blip on the radar from that perspective. But in terms of economic news that we've seen this week, particularly in Australia, I think perhaps the concerns in Australia is that our GDP numbers came through during the course of the week, and yes, the economy's growing at about 2.5%, annualized, but when you compare the March quarter versus the December quarter, our economy for the March quarter grew 0.3% versus 0.9 in December. So that's a real reflection of high oil prices, people being a little bit more cautious, perhaps a little less confidence in the economy with what's been going on, particularly in the Middle East. So, it is a concern, and I'm starting to hear. I don't know if you guys are starting to hear the word stagflation, as we know, which is increased prices, but an economy that's not growing. That's a concern. That's the last thing that we need. So it'll be interesting times when we look at what the RBA does next, and is this enough sign for them to say, actually, maybe we've overcooked it, maybe we don't need to do anything for a while, and let's just let things play themselves out in Australia.
That's an interesting one, Mirko. Do you actually think interest rates will go up at the next meeting? Do you think?
I think they'd be very brave to raise rates, in truth.
Yeah. What about yourself, Lisa? Have you got a view on that?
Well, certainly plenty of commentators having an opinion on that one. That maybe if they wait, then it's a definitive, the one thereafter.
Yeah.
But yeah, a lot of nerves out there, aren't there? And a lot of people slowing down with clearance rates with auctions and, a bit of fear in the markets as to buying property, not just necessarily with some of the other May budget changes, but more so just, if interest rates go up, can I afford my house? Yeah, I think there's a lot of reasons for the RBA to maybe be a bit nervy about pushing up straight away.
I
Mm.
s- I
Yeah.
saw that clearance rate stat, Lisa, during the week, and in Sydney, once you adjust for the data that was sort of missing over the weekend, it actually brings them below 50% clearance rates, and I don't think they've seen that in 6 years. So, and yeah, Victoria certainly wasn't faring much better in the low 50s. So, I think that's something that needs to be watched. That's for sure.
it's very much the perfect storm in the property market at the moment, with interest rates having risen the way they have, and then the government going and changing the settings on negative gearing and capital gains. It's definitely set the cat amongst the pigeons, I dare say, in that space. So it's going to be interesting how this plays out. And you know, the guys that work for Domain and those sort of guys who are property spookers, they're out there. They're doing a really good campaign on the socials, letting the world know that the government has got the settings wrong. So it'll be interesting to see whether or not the government holds its resolve in that space. So look, thanks for that update, Mirko. One of the things I did want to talk about is there is a fair degree of excitement at the moment. There's an IPO coming on the market in the next week or two, which is called SpaceX, and it's the brainchild of Elon Musk. So, and Elon Musk, as we all know, is one crazy cat, but SpaceX is promising to change the world. And I've gone through the prospectus. I've tried to pull it apart. I've tried to understand it, and it talks about, you know, humanity potentially reaching Mars and doing all these sorts of things. I guess my concern when I read the prospectus, it felt like that the share price was going to get to Mars a lot quicker than humans. Mirko, can you give me the bull case for why SpaceX might be a good idea? And then, Lisa, I might go to you to give me the bear case, if that's okay. But
Sure.
Mirko, to you first.
Well, the bull case, love him or hate him, is Elon Musk has got his name all over this. He actually has 85% control of the company because he has even after the float, because of the way that the voting shares are actually structured, and you know, and the bull case is that the total addressable market, ready for this, is $29 trillion. Right, so that's and I love IPOs. I love these floats. I love what gets put forward. But do you know that there's $29 trillion worth of business out there, guys? You just don't know about it, right? We're going to have data centers in space. We're going to be doing all sorts of amazing things. So why wouldn't you get on board? That's the bull case. I'm trying to be bullish and present my side of the story, but I can't even convince myself. I'm super concerned about this. I'll be honest, guys. And you know, a few clients have actually asked about it, and there's so much hype about it. You know, truth be known, we've actually got some investments in some sort of like space type assets through private equity that are legit, you know, building next space stations and things like that. It is a very difficult process, and it's a long burn. Yeah. And, you know, whilst this is going on, 10 days ago, I think that Bezos's rocket blew up, like at the launch pad. So look, I'm going to watch this with interest, but it's certainly going to be the biggest flight that we have ever seen. You know, they're talking about raising, I think, $75 to $100 billion at a valuation of 1.75 trillion US. So huge.
Yeah, this is nuts in terms of that. And mind you, if it achieves that outcome, humanity will have its first trillionaire. In terms of Elon Musk. So from that point of view. So Mirko, thanks for being the bully.
I tried as hard as I could to be the bull, guys.
and I'm glad you did raise that $29 trillion thing. It's like, given that he said 29 trillion, he could have said 51 trillion, because at the end of the day, you can just make up numbers, but that's okay. Lisa, can you give me the bear side of the world in terms of why should investors potentially be worried about this one?
Well, and certainly what he says and what actually happens. I mean, think about it over and over again. Cybertrucks and, you know, self-driving cars and nonsense that comes out of his mouth is almost as common as the Orange Man giving us nonsense out of his mouth. Look, fundamentally, I guess what is interesting is SpaceX has been a loss-making company for 20 years. So, you know, lots of brilliant ideas about the future, and certainly Elon Musk is on record not only, you know, wanting to take he and his family and 1,000 kids off to Mars, along with the worthy few, Neuralink, you know, Neuralink, one of his other companies. Humans aren't good enough. We need to put implants in them. I mean, he doesn't have a lot of thought and respect, I think, for the human race. Certainly trying to breed lots more little Elons, that's for sure. And look, fundamentally, Elon does have, a lot of fans, that's for sure. For every person I meet who'd rather scratch a Tesla, there are certainly plenty of, and in particular, I've noticed young male fans of this man. But yeah, just the first quarter of 2026, the company lost 4.3 billion. 18.6 billion in 2025. So he's very good at burning through money, that's for sure. Look, heavy interest amongst retail investors, fear of missing out for sure. Could create an opportunity, for that to go up. But there's a lot of bending of rules going on here. Normally, when a company like this hits the market, it would be 90 days before it's able to trade within indexes. And somehow he's got some magic ability. He'll be included in the index in 15 days. So if things do go poorly, we could see major fast change. Normally why they have a delay is so if some big company like this hits the market, we get to have 90 days for everyone to really think hard about the realistic returns and whether it is worth these sort of numbers or not. So a 15-day period is very, very short. If all the indexes start buying in, it means just about everyone in the world, would potentially one day own some of SpaceX. And so if it then has a big tumble, could have some pretty wide-ranging impact. So it's not even the people who want to be involved. We might all be forced to be involved regardless of your preference.
Yeah. Okay. All right. Well, look, and I appreciate that. So I take it from the two of you. Yes, you're interested because you're financial nerds, but not necessarily interested in putting your hard-earned into this thing. Would that be a fair description?
We do take our money management seriously here, and speculation is not high on the agenda at Innate Wealth, that's for sure.
Look, I think for mine, I think the issue that, and there is no question that Elon Musk is an extraordinary human being in terms of his capacity, his thinking, and some of the stuff that he's done in the world is amazing. So let's acknowledge that. And genius is genius, and it's a fine line between that madness from that point of view. So I understand that piece as well. I think the thing that bothers me about SpaceX is that you're being asked today to pay tomorrow's prices, and you're being asked to trust from that point of view. And I think the initial euphoria will push that in the initial phases where the fear of missing out trade, I think, is real, Lisa. So I agree with that. But I do worry about the consequences when the data and the fundamentals start to get reported, when you kind of go, well, hang on a sec, what are we buying here? And, having been around in 2000 when the dot-com boom occurred, there were many a good company that were going to do amazing things and change the globe that went broke overnight. And that's a fact.
Yeah, and Elon Musk has certainly, destroyed value in companies before as much as he has built value as well. So taking over Twitter and destroyed the value of that company. He doesn't only have positive runs on the cards, and as you said, Mirko, he's going to continue to be the major controller. So what he decides is going to really impact.
He's also the controller of your Tesla too. Yeah, he can turn it off whilst you're driving it, which is a bit of a worry. I've never been comfortable with that concept. All right.
And after what we've said, if we had Teslas, that would be turned off. And I love the fact that Lisa's joined us today, and she's managed to get a self-ban from traveling to the US as well. Well done. So you can sit on the sidelines with me, or if you want, you can travel to Guantanamo Bay with me when we land.
All right. And on another thing, I think it'd be remiss of us not to talk about CGT at this particular moment in time and in the budget legislation. So during the week, or late last week, we had the government introduce the legislation for changes to capital gains tax and negative gearing. The news in yesterday's thing is that it actually passed the House. So it's passed the House. It's now gone to a Senate committee where I think it's going to be reviewed over the next couple of weeks. And pretty much what they're looking to do is have it executed and implemented in full by early July or mid-July from that perspective. But it's amazing how now the detail's starting to appear. And one of the things that we did notice in the legislation yesterday was that the way capital gains tax will be treated and the way we can actually go about doing it. So in the past, we could claim capital losses against any sort of gains. But what the new rules are doing is it's changing the order in which investors can play the game. And the problem that from that end, it'll actually mean that we end up paying more tax. So in the past, we could choose where we wanted to apply those capital gain losses. So it was pretty simple to do. But the new legislation actually introduces mandatory loss ordering. So what that essentially means is that we've got to apply the losses against the oldest capital gain. So previously what we were able to do was apply the losses against the ones where those assets where they may have not qualified for the 50% discount. So that was called clever accounting. Guess what? Clever accounting has gone out the window. We're not allowed to do that anymore under this new legislation, and we've got to apply it against the oldest gains. What does this mean? Well, it essentially means for people who've accrued assets and longer term profits and all that kind of stuff, it means you're going to pay more tax. So a very cheeky move by the government, I guess, from that point of view. Knowing what we do, knowing how we try to manage client outcomes and so on, do you think this is fair? Do you think this is part of the intergenerational message, or is this really just another tax grab by the government? Okay.
Yeah, look, I think that this is the old devil's in the detail, and people weren't sort of expecting this, but now people are starting to do the numbers and sort of saying, well, hang on a second. So where is the incentive for me to invest, period? You know, like I'm the one that's going to take all the risk here, yet I don't seem to be able to have any benefit whatsoever. In fact, you know, the government's got their hand in my pocket saying, thanks for taking that risk, and we'll take our cut. Thanks very much, play on. And this actually, when you think about what the problem that we were trying to solve here in the first place was housing affordability and accessibility, particularly for young people. Young people have actually been using these types of investments that are sort of more liquid, that you can, you know, trade and the like, to have the ability to sort of fund a deposit one day. That was what they were doing. They you know, the ones that are a little bit more educated, well-read, they're saying, well, I'm not going to get the job done having my money sitting in a bank account. I need to be an investor in the bank or in some share, or, you know, but now all of a sudden that actually affects their ability to raise the deposit, which was the very thing that we were trying to help them do to get into this unaffordable housing market. It's a bit of a concern.
Yeah, I do subscribe to that. I do subscribe. Lisa, from your point of view, and funny, we were on the road yesterday and we spoke to some clients yesterday, and I think most clients actually understand what the government's trying to do, but it feels like the execution and the message of the government, when we're looking at the detail now, you're kind of going, yeah, I'm not entirely convinced that this was done with the intent that you're saying it was done with. Do you get that feeling?
Yeah, look, one message the government was sending is we don't want people to be able to cleverly plan with their accountant. I mean, fundamentally, there was a couple of elements of that. Certainly, you know, not, I mean, this is a reflection of that, but, you know, just the straight tax that you could claim when you next do your tax return, you know, a flat fee there so people don't have to get creative with their accountant if they don't want to, was a very small example of that. Yeah. A bigger example was, was certainly around this sort of element, basically taking planning out of it, right? Strategic, I'll sell this asset in that year. I'll wait till I'm retired to sell an asset. It will make no difference moving forward in some cases with these new laws. So it matches that element of the messaging. But yes, I totally agree that if we were just looking at first home affordability as really the driver, this is far overreaching that intention. But I think for a lot of people, they're just hearing the bigger message. And if they think all of this will generally not affect them and just help out some, you know, some other person's child or grandchild or their own, they will accept that on face value if they are not, you know, an owner of multiple properties or many shares. They've mostly got, like your average Australian, they've got their house and their super. So those people are like, yeah, I'll take that messaging and I won't look deeper.
Yeah, you're probably right there, but I do think the social media campaign is something which is being well run by you know, interest groups from that point of view, which is putting the government under a lot of pressure.
I think the biggest thing will be that element of small businesses, because that's really where the risk taking is, and you
Yeah.
want to reward that. And they employ most Australians, small and medium business.
Yeah.
It's not the big companies, it's not the big miners, etc. They're actually small employers in the scheme of things. It's all the little small and medium-sized businesses. So I think if I wanted them to spend a long time in the Senate arguing out points, it would be about very specifically changing any impact on small and medium-sized businesses.
Yeah, no, absolutely, absolutely. One thing I do think, however, is that I think these changes are a little bit unfair, particularly on the clients who are working under the old rules and will now fall into the new rules from that point of view, where selling the asset from that point of view and being able to sell that asset because they were holding on to it, waiting for a particular period where their income was lower. It seems a little bit unfair on that sort of stuff. I understand the grandfathering's there, and the grandfathering does protect, but the way these things are working, and you're starting to look at the detail and these little nuances that are appearing, they are closing those loopholes all over the place. So so I think there's going to be a fair bit of sting in this budget if we're not careful. Now, when we talk about sting this week, I would argue and say that our Orange Man friend in the United States had a pretty tough week. Donald's usually running around telling you how wonderful he is. He's doing all these wonderful and great things and so on. But this week he copped quite a bit of blowback from Congress, from the courts, from all that kind of stuff. Thinking about it from the two of you, what were probably in your mind, what do you think was the biggest loss for Trump this week? Mick, do you think there was something there?
Well, I mean, fresh off the press this morning, he lost a vote in Congress, which was the support for the war in Iran. He went off and did that off his own bat. He actually lost that vote this morning, 215 to 208, I think it was.
Yeah.
So that was a big one, and that required some Republican votes against him for that to happen, and he's gone on a rage now about how they were grandstanding, etc. But yeah, so things aren't going his way. Lost the ability to have that slush fund to defend people that were being targeted in his circle of mates. So there's a lot going on for President Trump.
He's struggling there. Lisa, what about you? What have you enjoyed this week in terms of the shenanigans of Trump?
Well, I enjoyed hearing Zelensky put out an offer to Putin to just do a direct negotiation between them because, Trump's too busy with his problems in Iran. So I liked that offer of sitting down at the table. I hope the gentlemen do sit down with a cup of tea and a couple of biscuits and sort out that situation.
Given the Russian background, I'm not sure about the tea, Lisa. I'm not sure, but look, we can only hope. We can only hope. I think for mine, I'm a little bit disappointed too. America is celebrating a major milestone in the next month, the 250th anniversary of the Republic, and that's an important. And the fact that this has been politicized and taken to another level, and it looks like the whole organisation around this, in terms of the free concerts and the free things that they were doing, has all fallen apart. Is just probably showing you how broken the American system is at this particular moment in time. They can't even agree on a party, for God's sake. So it's what Trump has done. The other thing that also is probably interesting this week, outside of the rejections that he's receiving in terms of the Congress and obviously in foreign policies and so on, is that Iran is still digging its heels in. So Iran's not going away anytime soon. So. And you can see Trump becoming increasingly bored with this whole process. Problem is, the rest of the world suffers as a result of this stupidity. So, look, the shenanigans of Trump just seem to get more entertaining by the week.
Did you see that arch that he's planning to build? That was it. He came out with that this morning. He's near Arlington, near the cemetery there. He wants something that's because it's a 250th birthday, a 250-foot high arch that he wants to build to sort of compete with the Arc de Triomphe, I believe, where the Tour de France finishes on the Champs-Élysées. And everyone just said, how soon before he puts his name on it, like all the other buildings he owns?
Well, this is the thing. And I think the other thing this week, even the courts upheld a ruling there where he renamed the Trump Kennedy Center, or what used to be the Kennedy Center, to the Trump Kennedy Center. And the courts correctly say, hang on, you can't do that. That's Congress created this. You can't do that. So remove your name and reopen the place because he shut it down from that perspective. So look, he's had a tough week. He's had a tough week. I've got to give him that. One quick question, and something in the articles that appeared this week, which caught me by surprise. Actually, we've been watching an exodus from what are industry funds back to self-managed super funds. And over the last 12 months, in theory, there's data pointing to $8 billion being removed out of the industry fund sector and moving to the self-managed super fund sector, which is interesting. Now, part of the reasons given for that is that people are not really focused on the return. So the reason for moving is not around the return piece because they believe returns can be the same at both levels. But what they're looking for is more personalisation and more outcomes which are fit for purpose that they believe that the industry funds don't do. The question that I have for you, Lisa, is do you think that the industry funds could be suffering from a touch of hubris or complacency, or do you just think that people are becoming more informed in this modern world?
Well, I guess you have to see what did then people do with that money. They might feel it was their preference, but it will be, time will tell if their preferences really suit. I mean, the next thing that could happen is someone just buys 100% SpaceX shares, thinking Elon Musk is, their return god, and that's where they want their money. Yeah, so I think it's because you can't see through to a lot of portfolios. It's really hard to say just because it's your preference as to whether that was the right move or will be the right move. But do we really necessarily want industry funds spending more and more time and energy, member money, on offering every option under the sun? It's just not necessarily their space. And there's plenty of retail funds that can offer all the range, work with an advisor, to select those things that are your preference, but also then having someone to say, well, fundamentally, what are the pros and cons of that approach as well? So there is already, another option in that space to keep things simple, have somebody, or the fund do the tax returns, etc., for you, but still have quite a lot of broad choice without having to add that extra layer of having to organise, audits and accountants and etc. So there's already a space for that. Doesn't necessarily need to be, taking the risk on as a self-managed super fund member and trustee.
Yeah, no, true. But look, I think one thing it has probably highlighted is that I think from an industry fund perspective, whereas I think the objective was to just gather assets, I think what they probably need to go, well, okay, where is our space and what space are we playing in? And I think for an area there where people aren't engaged with their superannuation or are looking for a simplified version, I think the industry fund plays a great role. And I think for the areas where people want more personalisation and people want tailored advice or tailored structures from that point of view, that's where the SMSF plays from that point of view. And I think the market is large enough to accommodate all nuances. Whereas I think this whole notion of it's all about the return and so on, because one of the criticisms we've always had of the industry funds, the larger that they get and the more mass market that they become from that point of view, is they end up replicating this market because ultimately that's where the money goes. They can't go anywhere else. And then they start to look elsewhere, and that's where things start to go pear-shaped. And things can blow up from that point of view. And we've seen that in the past with Australian Super making a couple of errors. We've seen Hostplus make a couple of errors from that point of view. MTAA, many years ago, nearly setting the place upside down in terms of what they did. So there are these sorts of challenges. So, Mirko, I guess we do a lot of work in the industry fund space. We see a lot of value in what industry funds do and the work that they do in that space. Is this an issue of complacency from their end, do you think, or do you just think consumers are just becoming more discerning?
Oh, look, I think the consumers are becoming somewhat more discerning. And look, the reality is, we talked about the budget before. I think one of those indirect, effects that we're actually seeing is that superannuation seems to be the winner here when, in terms of the changes that haven't actually impacted superannuation, which is nice for a change that they haven't changed the rules there. So there could be a fair bit of money that's actually moving across into self-managed super funds because people, the number one, if you ever read the data that comes out of the ATO over the years, the number one reason people were opening up SMSFs in the first place was control. This perhaps could be a reflection of the budget changes and the control. What I find interesting, and forgive me because I'm the ultimate cynic when it comes to this, is that the government, if you pay attention, has been pushing super funds to say, you guys, with all this money that you've got, you should be, getting involved in infrastructure and doing all that sort of stuff, which is fantastic. They're now crying foul because all this money's going out the door. How soon before they're now talking to the government saying, we need to somehow put a stop to this, and yes, we'll assist you with your infrastructure requirements because we've got the money to do so. So that's the cynic in me. But you know what? The fact is, at Innate Wealth, we're product agnostic here. So like for us, it's always a case of what's the best fit for clients for what they're trying to achieve. Do they like the complexity? Do they not? Do they want, to just leave things as they are? We don't care, right? We always want the best for the client. So I think industry funds have a place to play, as do SMSFs, as do retail funds. And this space is very dynamic. This is actually one of the biggest parts of the Australian economy when you think about it, and it's legislated money going in there, 12% every pay cycle as of 1st of July, by the way. So it's a huge amount of money that's invested. So this is a space that you should pay very close attention to.
Yeah, no, thank you for that. Thank you for that. Now, and mindful of time, but I wanted to just raise this point. Victoria, God, I love this state. We've knocked another record off the block here in the sense that apparently we are leading the country in car thefts. So that's pretty cool. So in a country where $500 million worth of cars were stolen, 243 million was just in Victoria alone from that point of view. So kudos to the Allen government. That's another tick to your bow. You've done that well. You've nailed it. The beautiful part about this is not only are we impacted here in Victoria, but because of the theft rate, the national pool of insurance cost has risen across the country. So the rest of the country is absolutely looking at us at the moment, not too happy. You've got to be pleased about Victoria's performance on this case, can't you?
Come on, we're not going to lose at everything. We're leading the table here. What are you? Why are you complaining? I'll tell you why I'm complaining. And I looked at a insurance renewal policy recently, and and this suddenly becomes my problem. One of the kids' cars, which is arguably probably not even worth $10,000, the insurance renewal was $3,300. I'm like, are you serious? But that's the net effect of all this, isn't it?
Yeah, of course it is. Look, it is, and I know we shouldn't take the mickey out of this. It shouldn't be happening, but this is what happens when you let things go pear-shaped, and so from a policing, from a consequence point of view, from whatever's going on, it just seems like at this particular moment in time, in Victoria particularly, we've just kind of dropped the ball on this one, and chaos has ensued.
Well, when the best advice that we're getting from the police is that, hey guys, when your door does get kicked in at 3 o'clock in the morning, make sure your keys are just out on the kitchen table and stuff. Don't go hiding them and whatnot, because that's what they want, and then I'll just leave peaceful. And I'm like, okay, should I include a free tank of petrol with it as well? Make sure the car's been serviced. Is that what you need to do?
I am bemused, Lisa.
Well, I think we should buy shares in the companies that manufacture and sell U-locks. I don't know about you, but my first two Datsun 200B, I had the old U-lock, double duty, right? Stop anyone stealing it, and also there just in case something else happened, right? Safety first. So I certainly just supports me continuing to spend all of my money on holidays and travel, and not on a fancy car. Be a small target, and get my U-lock out.
And I'm hearing it. What colour was the Datsun 200B, Lisa?
It was a terrible orangey brown shade. Shocking.
Oh yeah. I had the canary yellow. I had the canary yellow 200B. And we used to put our hands out the window just to make it go faster up the hill. It was one of those things. Kids, coming up to the weekend, I believe the weekend's actually going to be a little bit better given the start to winter. So the sun's going to be out. You're going to the Grampians, Lisa, so I dare say you're going to have a lot of fun. Mirko, what have you got planned this weekend, mate? Anything exciting?
I think there was talk about tea and biscuits at some stage. I reckon there'll be a few teas and biscuits on the couch this weekend. And all hail the king! It's the king's birthday, guys. Let's let's celebrate. Yeah.
Forgotten as to why we're having the time
That's
off.
right. Very important calendar date for us. Not even his birthday. Anyway.
No, not his birthday, but it's actually nice to have a long weekend from that point of view. So make sure you get out there and enjoy it and enjoy the sunshine. At least the weather's going to be a little bit better. Lisa, you be safe up at the Grampians.
Yeah.
Nick, you have a great weekend. To our team, as always, thank you for all the work that you do. I've got to admit, the last 5 to 6 weeks have been incredibly busy, and you guys have shined in terms of the workout load and the outputs from that end. So we do thank you as always. To our wonderful clients, as always, thank you for the entertainment. We love the conversations, we love the engagements, we love the challenging questions and the ability to converse and have some fun with you. Of course, this weekend, make sure that you get out there, enjoy the sunshine. And enjoy what winter is in Melbourne. Winter in Melbourne, when it isn't raining and when it isn't grey, is actually a really cool place from that end. And it's also a good time to drink some nice red wine as well. So just remember that. And to everybody else, have a wonderful weekend, and we'll catch up next week. See you then. Cheers, guys.
See you, folks.